So we've finally broken the August range on the S&P 500. What are you seeing in options land that suggested that might happen? And the truth of the matter is we're now in a slightly larger range, so still lots of uncertainty. It seems like it could go either way, to the bulls or the bears. What are you seeing, especially relative to options?
Yeah, I think the options market is a great place to look to see where people are actually positioning themselves for the rest of the year. And you can actually see in the XLC, that's the communications sector of the S&P 500, they're starting to hedge pretty significantly. You actually had 3,000 times the amount of puts being traded versus calls. And the XLC is 25% Google, 20% Facebook, and then about 10% AT&T, Verizon. So it's really the core FANG names that have a lot of regulation risk, not only regulation risk, but they also have global growth concerns. So if you think about earnings season coming out, people in the options market are hedging that exposure. So they're looking at the September and October durations and hedging the XLC, and that'll take them through some of the most turbulent times, including the earnings season for the big tech sector.
So that's pretty interesting for sure. And some of our other guests, and I think even before in the past, you've talked about the fact that options were showing that there could be some volatility in September, but then October on would be clear sailing. So it sounds like in this biggest beta high momentum area of the market, there's some smart, or at least early investors out there who are hedging against the possibility of some massive volatility. That is the truth?
Yeah, that's actually what is happening. So they're actually positioning themselves in September, but mostly October. So they're still worried about what's going to happen with the global growth story, especially because technology gets about 60% of its earnings from overseas. So with the slowing global economy, this is ground zero for that.
And before we turn to your trade, what other sectors would you be watching? Because obviously that's, again, high growth, high beta momentum. What other sectors would you be watching to see some kind of bearish action or hedging action that suggests that there's, really some concern that we could see some big volatility as the year progresses?
Yeah, I think what you want to look at is actually the staples sector, and you also want to look at utilities because they're trading at such premiums to their 200-day moving averages, and that shows the uncertainty and nervousness where people are having a flight to safety. You're seeing that trade pull off today alone as everyone's starting to buy these high beta names, but when you look in the options market, you want to look at those safe stories.